Hi, my name is Darren. Some may know me as the bird guy or the guy with too many kids. But what many people do not know is I'm a financial planner with a lot of interest in making my money work harder for me. Subscribe to my channel if you love money just like me.
Hi guys, and welcome to Let's Talk Money. So today we are going to talk about home loans. I'm sure that most of you guys watching either own a property or aspire to own one. Well, if that is you, then this video is created just for you. I have decided to talk about home loans because many years ago, I bought a condo without much research. My research was basically going to a bookstore called Popular and buying a book all about property investment, and that was all I did. I spent next to nothing doing any form of research. I did not check for the surrounding condos, let alone take any time to research as to what type of loans were suitable for me. It did not help that during that point of time, there was also very little information about home loans then. As I am currently looking for a place to stay for my own, hence I have decided to put in the effort to research more on the different type of home loans out there in the market. And because sharing is caring, therefore I have decided to share my research with you guys as well. I sincerely hope that this information will help you, and if it does, that subscribe button, as it will really help the channel. Of course, the usual disclaimers.
All information presented in this video is based on my personal opinion. I am not a mortgage broker, and all information presented is just for reference and entertainment purpose only.
Are you someone who will take a look at the first 2 to 3 years of interest rate and just choose whichever seem lower? Hey, that used to be me in the past. In fact, this seems to be the most common way of choosing a home loan. But is there more to this than just choosing the lowest first year or lowest average interest? In order to do proper due diligence, we have to understand that bank loans tend to fall within 2 categories, and they are fixed rate loans and floating rate loans. Let us go through each accordingly. So fixed rate loans, as the name suggests, are basically loans with a fixed interest rate. These rates are usually fixed only for the first few years, after which it will be tagged to a variable rate, such as the bank board rate, or to any floating rate that I will mention later with a spread. The opposite of fixed rate is floating rate. So for floating rate loans, the monthly repayment amount for your home loan will either go up or down depending on how the market moves, similar to a roller coaster. For example, the recent COVID situation has resulted in a very low interest rate environment. So if you had chosen a floating rate for your home loan, then you have been very happy as interest rate has been very low.
And where did I go wrong? I lost a friend somewhere along in the bay.
So what are the things that we need to take note of before committing to a home loan? First will be your opinion of the current interest rate and whether interest rate will go up or down. If you are of the opinion that interest rate will continue going up, then generally you choose a fixed rate so as to the home loan interest. However, if you think interest rate will continue, then a variable rate will make a better choice. The thing about variable rates are, there are so many choices in the market. So which kind should you choose? The answer is, it really depends on your own preference. Let us now go through the various variable rate options. The first variable rate will be bank board rates. As the name suggests, these are rates set by the bank. I myself generally do not like this because board rates are not transparent. We do not know how the bank actually comes up with the numbers, and even if interest rate were to go up, these board rates may not drop. And since I am someone who values transparency a lot, hence such rates do not appeal to me. The next rate will be SIBOR and SORA. Unlike board rates, SIBOR and SORA rates are published every day. You can typically find these rates online, and I have listed in the link down in the description. So if you are keen, please take a look. Just to share, for my first home loan, I chose a SIBOR package. However, what I didn't know was, because the interest rate kept on changing, my monthly installment kept on changing as well. Therefore, I would not recommend this option for lazy folks like myself. Because you can't set up an instruction to transfer a specific amount monthly to your loan servicing account to pay off the loan, as you will never know how much to pay. Hence, if you are someone who does not have a lot of spare cash like me, then this choice should not be a priority because of the above reason. And lastly, we have fixed deposit rates. So fixed deposit rates are generally offered by selected banks. Based on my research, I can only find such packages from DBS and Standard Chartered Bank. These rates are transparent and can be found in the bank's respective website. So if you were to ask me if I were to choose a variable rate, my personal preference would be to go for a fixed deposit rate. Reason being, firstly, it's transparent, and secondly, I'm of the opinion that they do not fluctuate as much as SIBOR or SORA. The next thing we need to take note of is we have to understand that different loan packages come with different lock-in periods. Some have a 2-year lock-in, others may have a 3-year lock-in, and so on and so forth. So why is this important to you? This is because if you have an intention to sell your property or perform a partial or full payment of the loan amount within the immediate future, then obviously you want a home loan package with either no lock-in or a very short lock-in period. This is because there is usually a penalty fee if the loan is redeemed either fully or partially within a lock-in period. And based on my research, this tends to be 1.5% of the outstanding balance. You may also want to take note of the repricing fee. So usually towards the end of the lock-in period, the interest rate of your package will start to go up. And this is where you start hearing the term refinancing or repricing. So in a nutshell, repricing is basically changing the loan package within the same bank, and refinancing is to change the package with a different bank. If you stay with the same bank, they usually have a repricing team who can offer you better interest rate with an admin fee. This is known as the repricing fee. Some banks also offer a loan offsetting account. So what is a loan offsetting account? It is an account where you can deposit your spare cash, and that account gives you the exact same interest as your current home loan interest rate. Now you might be thinking, wow, sure or not, what would the bank earn then? Well, I hate to burst your bubble, but these accounts usually have a cap, and it is usually a certain percentage of the outstanding loan balance. No bank will give you an account with the same amount of interest with no cap. They will just go bankrupt. Some banks may also offer features such as a waiver of lock-in penalty due to a sale. This feature would benefit people who want to keep the flexibility, as they do not know if they have any intention of selling the property within the next few years. There are times when banks provide the option of a partial prepayment even in a lock-in period without any penalty. This will definitely help those who have the intention of clearing the liabilities fast, as the lesser your loan outstanding, the lesser the interest to the bank. Lastly, some loan packages may also offer the option of doing a free repricing after the lock-in period has ended, and this is definitely a good perk. Now that we know what are the factors to look for, let's talk about refinancing and repricing our home loans. As I mentioned earlier, if you are one who has a bank loan, you will notice that the home loan rates tend to increase once the loan is out of lock-in. Therefore, a good practice is 4 months before your home lock-in has ended, it is always advisable to start inquiring around for a good rate. My recommendation would be to seek the advice of a responsible mortgage broker. A good broker will be able to share with full transparency on the existing loans in the market, and you will then be able to decide if it will make better sense to either reprice your loan within the same bank or do a free financing with another bank. The reason for searching 4 months before your lock-in expires is because should you wish to refinance, that is change the home loan package with another bank, you need to give the bank 3 months notice to your existing bank. However, if you wish to reprice with the same bank, then 1 month notice should be sufficient. Anyway guys, as part of my home loan research, I have compiled a list of the current home loan rates. And as a token of appreciation to you guys, you can drop me an email with your details and I will email my research to you. I hope you guys have enjoyed my sharing on home loans in Singapore. Don't forget to like and remember to that subscribe button for more finance related videos. See you!